Next person, I'd like to introduce Jeremy Kwenu. He was recently named the Young Fintech Leader of the Year. He's an experienced digital finance professional with over a decade of experience in banking and fintech. He champions initiatives that connect traditional financial institutions with the future of digital finance. He's currently the CEO of Jumo Ghana and the General Manager Jumo Africa. So I'll start with Kwabena, since you're close to me. Yes. I'd like for you to share with us investment opportunities in Ghana. You have worked with SMEs a lot, and one of the first impediments for SMEs, MSMEs, is access to finance. Would you want to give us some insights?
Yeah, sure. So, in simple terms, access to finance is one of many headwinds that I think SMEs in Ghana face. As you know, at my last check, I believe the currency is depreciated almost 33% year to date. Don't worry, it gets better from here. It's not all doom and gloom. So that is definitely a challenge, and that's where companies like ours and funds like ours can play a role in providing capital. Today, if you're going to the bank to borrow in Ghana, you're paying a fair amount of in terms of interest. The interest rates north of 30 is not uncommon, and some of our companies are dealing with that. What we've done, and I say it gets better because despite all these challenges, we have a portfolio that is doing relatively well. And part of that is I think we took the decision very early on to say that there are opportunities in the export space. So we made the decision strategically to back companies that were earning hard currency. And that's done well for us. Increasingly, we're seeing opportunities in the textile space, garments and textiles, I should say. We're also seeing opportunities in the business process outsourcing space. And that will continue to be a focus for us as well. And of course, value-added exports in the ag space as well are also interesting. So we've been looking at that, and that's done well for us. And I think that going forward, those are areas that we'll continue to look at.
Wow, interesting. Before I go to the next person, let me just ask you your second question, Kwabena.
Sure.
So you mentioned textiles and garments. It's actually, interestingly, between Ghana and the UK, textiles and garments is a priority sector. And I know your company has helped a number of smaller SMEs in exporting to Ghana. And by the way, with the in terms of trade between Ghana and the UK, there is a trade partnership agreement that gives Ghanaian businesses quota-free access to the UK market and vice versa for Ghana. So then it means that if you look at exports, it would really do well. Yeah? Yes.
So generally, there are a number of reasons why Ghana would make sense as a hub for garments manufacturing. Chief among them, to your point, is the quota-free access to the UK market. Yeah. But there's also the AGOA arrangement with the US that allows you one to export garments duty-free from Ghana into the US. You also have the added advantage of being closer. So your shipping time to the east coast of the US is significantly shorter than if you were coming from other parts of Southeast Asia and what have you. So all of those things add up, where increasingly you are seeing businesses make the trip to look at the possibility of exporting garments from West Africa and generally Ghana specifically. Some of you might have read about the recent Arise hub in Benin, but all of that is testament to what's going on in the sub-region. And I think that for those, especially it's a priority sector for the government as well, because it's an interesting way and a way of creating jobs in large numbers. So if you're trying to create employment opportunities, the garments sector is one to look at. And so yes, for businesses or investors that are looking for where they can potentially unlock value, I would say it's an area to look at.
Could you add a few more sectors before I go to Jeremy?
Oh, sure. I mentioned the business process outsourcing space as well. Again, we're seeing a number of investments into that space recently. I think one of your related institutions, BII, through the Growth Investment Partners, invested in an eSal, which is one of the BPO platforms in Ghana. I think that's one worth looking at. Another area, we've invested in and I know that the cocoa prices are doing what they're doing, but we've invested in a chocolate manufacturing business that is exporting into Europe as well. This is organic, fair trade plus chocolate, so you can also charge a premium for it. Consumers are becoming more savvy. They want to consume things. They know where it's coming from. They know it's organic. So it's done well for us. I think that the opportunities in that space as well. So those are a few sectors that I would say personally I would look at.
Thank you, Kobna. Over to Jeremy. So I'd like us to look at the fintech sector. Ghana is doing so well. It's catching up on the rest of Africa in terms of investment flows. So yes, it's also a priority sector for us. I think Nigeria is leading, but we wish to catch up soon. I'd like to know what interesting opportunities there are in the space, and in terms of regulatory environment, are there any challenges? Are there easy ways of, growing, expanding, or starting up as a fintech in Ghana?
Sure, thanks. So I think, as you've mentioned, the fintech space, generally it's considered that fintech is the future of finance. And we say that MSMEs or SMEs are the backbone of any economy. Well, fintechs are the ones who are basically trying to make sure that it's easy for them to operate and to be sustained. I think generally across Africa, the leaders are, we call them the top four. So Egypt, Nigeria, South Africa, Kenya, and Ghana is always there as number 5. So even with the global reduction in fund flow, we still saw that majority of the investment that came in went to fintech. 50% of the funding that comes into the digital economy goes into the fintech space. Jumo, for example, works with large banks and mobile network operators to grant access to finance to the underserved or unserved. What we are doing right now is disbursing 1.1 billion Ghana cedi in loans on a monthly basis. And even with that, the telco partner that we're with, MTN, says we are doing less than 10% of their eligible base. So the issue or the challenge there is not one of demand, it's one of supply. There's a massive gap. We now have the technology, we now have the financial institutions that understand the space that are looking to grow. But you see that as they are onboarding new customers, you also have to make sure the capital available is there to supply, and that's what the gap is. Most of the challenges that fintechs face across the continent generally typically have to do with regulation or immature regulatory environments, infrastructure like identification, and then just the understanding of this new sort of industry and phase. I think Ghana is quite lucky in the sense that we are one of the few countries that has a regulator that actually has a dedicated fintech and innovation department that is actually issuing out licenses and innovating themselves. Ghana's Bank of Ghana has done fintech hackathons, sandboxes. They are investing in regulatory technology and supervisory technology. So it's so much easier for a fintech to get licensed legitimately under the watchful eye of the regulator. And I think it goes with it's an understated fact. The fact that you even have somebody in the regulatory office to speak to about fintech in Ghana is quite undersold. The next thing is things like the identification. Now with the Ghana card, it's so much easier to clean the data that you have and identify if you're doing digital loans or micropayments, who exactly you're giving these loans to. It's a big solve that was a big pain point, or it's a big pain point across the continent. And it's one thing that allows us to scale even faster because the identification is there, the regulator is supporting you. And I think the biggest opportunity is that we have one of the youngest populations across the continent, right? The mean age for a Ghanaian is 20.9, so you have about 60% of the population under the age of 26. These are the digital or the tech-savvy, digitally hungry population that do want to do things on their mobile phones. Their perception of the best customer service is self-service. They want to be able to access a loan, make payments on their phones, and that, ties in exactly to what fintech is there to solve. So the opportunity is vast, and again, like I said, it's not about an issue of demand, it's really an issue of supply. So the opportunities are quite vast, at least in the fintech space.
Thank you. My next question will be on financial inclusion. How deep are you penetrating? And is there space for other financial products like insurance via tech or digital means?
100%. I think that we are sort of a mobile lender or lend tech in that domain of fintech. And even with a small company like Jumo, so to speak, we are onboarding about 4.6 new customers every minute. Of the customers that we are onboarding, about 70% of them are first-time borrowers. They've never accessed a financial service product, either savings, credit, or investment.
Oh.
You have 33% of them who are MSMEs, so micro SMEs, tabletop sellers. And this is just the first phase of what we are trying to achieve. There's so many more financial services that they don't have access to. That is an opportunity for so many other large players to come in to serve. Like I said, even with all that we are doing, that one telco is saying you're not doing even 10% of their eligible base. So there's a base that has been sort of scored and have been deemed to be eligible for financial services, but there's not really the financial service to serve them. So there's a lot of opportunity in the insurtech space, in the lendtech space, there's so many domains of fintech that have not been explored, but Ghana is, fertile ground for innovation, investment, all the 3 I's.
Wow, thank you for that. Well, we were partners for the 3I Africa Summit. It's a tech, fintech, digital conference that happens, that is to happen every year, started this year. Anyway, so my next panelist is Michael Akefia. I want us to talk about opportunities, being a lawyer, being an investment enabler. I'd like you to touch on the opportunities and a bit of local content laws. Seeing that we have foreign investors in the room, it will be good for you to touch a bit on our local content law and how it's fair and how it supports growth of your business or your investments in Ghana.
Thank you very much, Sarah Adelaide. I think people look at things like local content on the face of it and say that it sort of contradicts the whole drive towards getting foreign direct investment. But if you look at the way in which it is done deliberately and intentionally in certain strategic sectors, so that it's not cross-cutting, doesn't cut across industry. So you have it in the energy sector, petroleum, and then mining. And it's particularly necessary because over time it's been sort of determined that you need to cultivate local champions, you need to create the space for them to develop. So the way in which the law is implemented is a gradualist approach on an incremental basis. And then where there is no capacity locally, the idea is to still insist on partnering foreign investors and so on. So the approach to implementing this has been that the regulator has been issuing what you call the local procurement list, using, say, the mining sector as an example. And what they've been doing is that they've been adding onto the list only to the extent that there's capacity locally to supply to the industry. And so that has been one of the ways of doing it. And one of the things about it is also that you look at even multinationals like the ones that I work for have always, ahead of even legislation coming into place, been, as part of their ESG commitments, been looking to do more of local procurement to ensure that there's more value generated in the communities that we operate in. So that itself is self-induced. And sometimes we put more pressure on ourselves than even the regulation does. And so for us, if you look at even our financial reporting, the big chunk, 2/3 of it, is dedicated towards good stories like one that allows for local participation and so on. And so the other thing about it is that you find that in terms of sometimes the rhetoric that you hear about, say for instance, natural resources and so on, there's over concentration on the equity space without appreciating the maximum amount of value that can be generated from the input side into the industry. And that's one of the things I say. If you ask the question, what's the big difference between say, the mining industry in Ghana and say that in mature markets like South Africa and Canada and Australia, you don't have government participation in equity, but rather it's a value of what is generated. It's more of the input side and how value is added locally. And so for us as a country, that's where the drive is, and that's what is the underpinning philosophy behind local content, and that's how it's been implemented in the way that ensure. The other dimension to it is the social piece. I mean, most businesses like us have what you call, foundations, your corporate social responsibility vehicles, where you use that to try and link up in terms of what we call shared value. The idea of shared value is to ensure that people in the localities and the host communities are able to participate. They feel that they have a stake in what is happening. And so you try and link that to the input side so that hopefully we are trying to build capacity. The Chamber of Mines have, over time commissioned studies. And the good thing about, say, some of the industries like we have, like in the mining sector, is that we don't compete for market share. So we can work collaboratively to ensure that we use our buying power to generate value locally. So it's managed in a way that is not, wholly against the whole drive towards bringing in FDIs. Where we need capacity and we lack local capacity, FDIs are always welcome to complement what locally can be generated. Thank you.
Thank you. You touched on ESG briefly. I'd like to know what the uptake is like. I know for sure a few years back, it wasn't so much of a big deal for a lot of companies in Ghana. How is it being done now? How are companies implementing or putting into action ESG principles in their business?
Yeah, so there are two key possible pressures, having companies push towards their increasing their ESG commitments. You have the fact that investors, some of the biggest investors in the world, are dwelling on that and insisting on that as a precondition for investing. So you have the BlackRocks and the types of this world actually indicating on their website that they only invest in businesses that are tuned with current principles on ESG. So that's one of the drivers. And then the other dimension about it is the financial reporting. IFRS standards require for that to be incorporated in the reporting process. Of course, long before that, you had all this, governance, corporate governance experts like, pushing for what you call the triple bottom line reporting, where dimensions of the report, in fact, the 2/3 of it, I say these days, is dedicated to ESG and other communities. So you find that Ghanaian businesses, especially those of us in the extractive sector, have put it on top of our agenda, and you would find that every meeting, every performance assessment focuses on that. Every engagement with investors, global investors, dwells a lot on our ESG commitment, reducing our carbon footprint, diversity and inclusion programs, and all of that. So that even the whole idea of local procurement is an element of the social piece of ESG. So it's something that's alive and well and can only increase over time, and you find that more and more companies, even SMEs, because the way it works is that we take it on board, and what we do is to ensure that all of those are stakeholders, suppliers, all the different kinds of suppliers down the value chain also imbibe those whole principles so that they also cascade it through, hopefully, the entirety of the economy through that sort of approach. So I think it can only get better as we go along. Thank you.
Thank you, Michael, for those insights. So I'll move to Mr. Owusu. I'll ask you just one question so we could allow for questions from the audience. I think I didn't see anything in the presentation you did on transitioning, Would you want to tell us about your plan for transitioning to renewable energy or safer energy? What is the plan? I think that it wasn't in the presentation. It'll be good to have an idea that yes, this brilliant project we have, it's a legacy for all Ghanaians, maybe for all Africans, but how are we positioning it to meet what is global standards? What is the plan?
All right, thank you. So I think it was there under the sustainability with respect to the petroleum hub. So under the sustainability approach, I spoke about 2 pillars. You realize that we have what we call the hub group. The hub group, we're trying to plant trees. The 20,000 acres of land. Instead of building bricks and mortar, we're going to use trees to cover the entire land. So we're looking around 300,000 to 500,000 of trees, which we are in discussion with Forestry Commission to even give us the type of tree that will help us achieve this sustainability. So that is one. If you look at the power plant in terms of energy, the 1,000 to 5,000 megawatts is going to be a gas-fired power plant, which is going to use gas, which is then the transition fuel now. We're going to have renewables within the commercial and the residential area, so that the power plant will feed on the heavy stuff, which is the refinery and the petrochemicals. And then once you come out, the whole country launch its energy transition and investment plan at COP28 in Dubai. The president led that. So the plan now is by 2060 is what we're going to transit. Right. And I think it has a value amount of $550 billion US dollars, which the hub is inclusive of that. So there's the country energy transition and investment plan already that has been launched. And I think we are the first in Africa to have launched our energy transition plan. And then when you take the hub to, there are so many things that we're doing to also ensure. If you look at the infrastructure, we are building 5 petrochemical plants. It's strategic. You know, we have 3 refineries and you have 5 petrochemical plants. Now, we are also saying gas is the transition fuel. So when we get to, let's say in Ghana's case, that we want to transition, that's the just transition in 2060, all we need to do is to configure the 3 refineries to top up to the 5 petrochemical plants that to do hydrogen. So if you look at the existing hubs like Houston, Singapore, and Rotterdam, that's what they are doing now. They are trying to configure some of their refineries to be able to embed it in hydrogen and all of that, just to be aligned with the current campaign. So there's a plan for Ghana, which I've spoken about, which we can all download it, the Ghana Energy Transition Investment Plan, and also the plan for the hub. So I don't know whether that addresses your concern, Sarah.
Yes, it does. Thank you very much for that submission. At least we have a little commitment there to do right by a certain time. I'd like to open the floor for questions from our audience. Yes. Okay.
Good afternoon. My name is Samuel. I work with Western Premium in Ghana. We are a fiscal asset management and maintenance company. My question goes to Michael, and it's basically on the local content conversation that we keep talking about. When we come to his industry, specifically in mining, we've realized, and part from experience, that intentional efforts has been made to make the industry expensive deliberately, in my own personal view. And if you look at, if today you want to work within the mining industry as a new player who wants to contribute to the local content, you go and you want to register, talk of the Chamber of Mines or the Mineral Commission, you're talking about $5,000, $10,000. And it's very expensive for new businesses that want to contribute their quota with their local teams based in Ghana. How are you also saying that you're contributing to local content? Meanwhile, to participate in it is very expensive. Is it an intentional effort to make it an affluent sector? Or what would you say about that? Thank you.
Thank you, Michael.
Well, so thank you very much. Actually, one of the interesting things about the mining industry is that it tends to be a dollar-denominated ecosystem. So that's part of it. But actually, these concerns have come up, and the regulator, the Minerals Commission, has nothing to do with the Chamber of Mines. We're a private business association. The Chamber of Mines itself raised those concerns with the Minerals Commission, one of the things they've accepted to do is to reduce the rate for local entities when they apply to register with them as what they call mine support services. So there's a reduced rate. I mean, I think that headline thing about the prohibitive rate came up very strongly, but over time it's been reduced, so we can engage after and I'll confirm to you. The other dispensation that Minerals Commission does for local content providers is that when it comes to them, say, bidding for contracts, all they need to have done is put in the application. They don't need to have paid the amount for us to consider them. Well, the next level is for the Minerals Commission, in collaboration with the Chamber of Mines, to develop what they're calling a database for all mining companies to become aware of, especially for local players, to allow them to register ahead of the payment of the fee, so that then they get a foot in even when you are doing your competitive business or restricted tendering, so that they're able to participate. So we can engage and find ways of avenues for addressing that. That came up because, in theory, all kinds of other mind support services, even those providing the most menial of services, are required to register, but they've come up with a dispensation which addresses those in that category. So I think we can discuss and see how we position that going forward. Thank you.
Thank you. I think we have someone. Question? Okay. We'll come to you shortly. And we have less than 5 minutes to wrap up. Please go ahead.
Sorry. My question's for Jeremy, actually, which is, I'm quite young, just like yourself, and I noticed that, you're dealing with fintech. And so my main question is, how are you dealing with competition? Africa's a huge market, right? And it's one of the biggest markets there is. How exactly are you competing with the existing dominant markets or companies that there are that operate within Europe and the US? Particularly, for example, I'm young, I'm 26, and I use Revolut pretty much every day. How are you competing with that? How are you bringing Jumo into the African markets? And how are you going to deal with that competition threat, really?
Sure, I think that's a really good question. I think that, like you said, the African market is large, but it's also very unique and it's also very nuanced. Going from country to country, you begin to find that it's a different ecosystem, even if you have two bordering countries. So the same sort of solution and approach you would apply in Nigeria will not apply or will not necessarily apply in Ghana. So the approach that fintechs take is to think global, but to act local. So you think about the global best practices, what has worked generally internationally, why 26-year-olds are using Revolut, and then think of the 26-year-old Ghanaian to say, which elements of that can you apply? Is it the ease of use? Is it the user friendliness? Is it the fact that the interfaces mimic what they see on social media? And then bring that to a 26-year-old Ghanaian in a village like Sesiriaso and realize that does not actually apply. But they still want the same speed, they still want the same ease of use, but their channel is probably not a mobile application. Maybe it's a USSD that is a *170 short code. It still gives them the same elements that the global competitors present, but it localizes in such a way that you are connecting with the user on the ground. The other big players that we tend to compete with are the banks, where people feel like fintechs came in to compete with the banks, but you begin to realize that it's more of a collaboration that is going to be the way forward. So what we try to do is not sell ourselves as a player that is coming in to replace them, but a player that is coming in to enable them to access the segment of customers that they previously could not access. So it's a multi-layered approach, but it's trying to be as realistic as possible given the market segment that we're addressing, versus staying cognizant of what is global best practice, so that we, like I said, we act local, but we think globally. Hope that makes sense.
Okay. We'll take the last question here, and then we will wrap it up. Okay.
Hello? Yes. Good days. Jumo, I think this question is actually for you, and I'm just taking it from the word, your statement, that the telcos were telling you, despite the success you have achieved so far in fintech, you are just crashing it at just about 10%. And to me, I think that's the cause for action. That's why the 90% still pending, and that's a good source of investment, so to say. But from our own experience, there's a difference between, the fintech being a channel of banking to having a mobile money. I think you understand better. We have in Kenya, we have a high financial inclusion through the model of telco-led mobile money application, whereby money is being digitalized. But just like Nigeria and Ghana, some of us are afraid of going to that model. What is our operation? Why? Because that will have opened up so much opportunities, so to say, and will have covered enough ground. Thank you.
Okay.
I
So,
think in
Jeremy,
60 seconds,
if you could just 60
in 60
seconds.
seconds or less, I think that that's a brilliant problem that you've highlighted. I think that one, mobile money is basically creating the rails, and mobile money is not the length and breadth of fintech. It's the responsibility of fintech players, investors, to come in and solve the underserved base. So we are trying to do one domain, which is mobile lending credit, but there's investech, there's so many different domains that need to be solved, and that is why the problem is not the demand is the supply, and there's a large gap. So it's one of the sectors where we actually welcome competition as opposed to push it away, because it's not dominated by any specific player. So
Okay.
yeah, and I mean we can keep the conversation going after.
Right. Thank you so much, everyone, for joining us today, and thank you to our esteemed panelists. We're still around. We'll be around tomorrow. We have a desk on level -3. Please pass by, interact with us, get all the information you need on investing in Ghana, on doing business in Ghana. Thank you very much once again.